Thanks so much for joining us this morning. So a very good week for stock markets all around the world last week. The Greece threat kind of receding. What are the factors driving markets, and is this good sentiment going to continue into this week?
Well, clearly last week the bulls won the tug of war that's currently going on between the bulls and the bears, and basically just on the basis that there wasn't that much bad news last week. So good news more than bad news, and that drove stocks higher.
So what do you think about this sovereign risk threat? Has it been overdone? We've seen that investors are feeling better about the Greece situation, but do you think that this is a very real threat that's going to make its way back into the markets?
The sovereign risk threat will be around for a while. It may move on from the EU, but there are still other countries which look a bit shaky. Venezuela, Ukraine, there are other countries that, may scare us still.
So sovereign risk is going to be a theme in 2010 then?
I'm afraid so.
Okay, now what about the earnings season? Because that, of course, is winding down. We've seen a lot of companies beating expectations. What's your take of the earnings season?
Well, we've finally seen what we had been waiting for, which was some top-line growth, i.e. not profits improving from cost cutting, which is maybe good for a company but not good for the economy. So we're seeing top-line growth coming through, good earnings season, and that is really what's buoying the markets at the moment. That's what's driving us further, because if we see some growth in earnings, then there can be higher dividends, and with higher dividends, then stock markets may not look quite as overpriced as it feels.
How do you feel about valuations right now? We were just talking about how the UK's stock prices are now at an 18-month high.
Well, globally, from a sterling perspective, investors are even looking at an all-time high, which is amazing when you think about it. Well, we're a bit cautious. This year is not the year to overly embrace risk as it was last year. We have to watch what markets are doing, so we're a little bit more defensively positioned, not necessarily equity underweight, but just more in stocks that perhaps didn't do so well last year as the more risky titles rallied most.
What are you predicting over the next few months? A lot more volatility or direction here?
Volatility is always an expression of I don't know where it's going. So we think overall it is going to go up, but yes, unfortunately there will also be quite a bit of up and down, just as that tug of war between the bulls and bears continues.
Now, one of the things that helped out stocks last week was the U.S. jobs report, which came in better than expected. Only 36,000 people lost their jobs or something like that. And, it seems that investors were more encouraged about the state of the global recovery. Are you encouraged, or do you think that there's still a good chance of a double dip?
We think there's still a probability of a double dip, but it's declining. It's not. The probability of not having a double dip is actually now higher, but the eyes are very much on the US. Last year, China bailed us out globally. This year, it's got to be the US that needs to pull us out of this and needs to go ahead.
I'm interested to come back to Greece for a moment and ask you about this. I mean, how important from a market standpoint, from a market confidence standpoint, is it that the EU finds a resolution here? Because this Greece issue has shown up a structural crack in the European Monetary Union.
Yes, I think it's very interesting to see the discussions over the weekend, perhaps for the EU to form an EMF, a European Monetary Fund. I think that's very sensible because, as you say, it has shown that the EU hasn't quite thought of all the possibilities that might occur, and therefore, in order to prevent things like this in the future, it's good to have some thoughts in that direction.
Okay, thanks so much, Lothar Mentel.
Thank you.